Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio is Amit Ranjan. And it's a Monday morning and a start to a brand new week, but it's a holiday shortened one. Our markets will be shut on Friday on account of Mahashivratri, so we have a long weekend ahead of us, guys. But don't let the shorter week fool you, because there's plenty happening both at home and abroad that could keep the market buzzing this week. Now, over in China, all eyes are on their 2024 growth target announcement, and they plan to boost their slowing economy, which will be unveiled during the big annual political gathering later this week. Meanwhile, in the US, tomorrow is a significant day, as you know, millions of voters from 15 states will be heading to polls for presidential primary and caucuses, making it a crucial moment in the political landscape. And let's not forget, Jerome Powell is lined up for testimony on March 6th and 7th. The US Federal Reserve Chair will be presenting the semi-annual monetary policy report, so investors will be paying close attention to that. And on top of it, we have global services PMI numbers and a bunch of US economic data lined up too. And the equities in India are not just doing well, it's across the board. Amit, fill us in, please.
It's green everywhere in the US. Suyash, good morning. S&P and Nasdaq both closed to record highs again, backed basically catalyzed by the AI boost. Nvidia gained 4% and closed above the $2 trillion market value mark for the first time. Rival Advanced Micro Devices hit another record high. So it is green everywhere. Dow Jones closed in the positive at 0.23%, S&P 500 0.80% in the positive, Nasdaq 1.14% in the positive. European markets were in the green as well. Stock 600 closed in the positive at 0.6%. Hang Seng this morning, however, is in the red marginally at minus 0.06%. Nikkei again is in the green at 0.59%. And Apple, which was the cushion sometime last week for US markets, is seeing some correction. But Disney continues to soar in the green.
All right, Disney continues to soar in the green, and of course the story is playing out in the US markets as well. The indices are at all-time high levels. In fact, in India, we almost saw a vertical up move on Friday session, and I mean, after that exhausting 350-point rally, it seems that bulls are taking a bit of a breather this morning. We opened in the green, went on to make a new record high of 22,440 mark, but some bit of a sluggishness has set in. I think, Amit, it's the broader markets that could play a spoil sport right now, because remember, in the February series, Nifty, the large caps actually outperformed the broader markets, and that is significant because that has not been the case for the longest of times, in fact in the last 12-15 months. But Nifty, while it's doing well, while the large caps are doing well, it's the broader markets that are feeling some bit of a pain. And even this morning they are pulling the markets down, although the small cap index is up 0.5%, the mid cap index is down about 0.3%. But the good thing I would say, Amit, over here is that decline in volatility. We have continued to see that as the markets is moving deeper into uncharted territory. We were around that 16 sort of levels, but we are around that 15 mark. But we in fact broke below the 15 mark on Friday, but volatility is picking up slightly this morning as well. We'll keep a close eye on that. But with that, let's also bring on board Mr. Brijesh Ayal of IDBI Capital Market. Thank you for joining us here on News9, Brijesh. Always nice to see you. And the March series is off to a cracking start for Nifty. I mean, that is usually not the case historically speaking. We are currently about 2.5% shy of that 23,000 mark. Is that a possibility by the end of the series?
Good morning, Suresh. So, first thing, as you stated that this is a truncated week, so we have very limited trading session. In the last week, we saw that there was almost the new all-time high levels. So today being a Monday morning, I think it's a slightly a distribution. Some profit booking is coming, but I don't believe this would be a bigger profit booking. 22,300 is the mark from the intraday perspective. I think that is the level somewhere again our Nifty should take support. If I talk from the weekly perspective, I believe 22,500 is one level where I think we should be seeing some resistance, because at that point there are call writers are actively having their positions. But there is a sense that this call writers may unwind their positions if today we see a good strong positive close. And as you said, Nifty should be heading to 23,000. 22,800, 23,000 is a reasonable upside. So bias is extremely positive. I don't think there would be a much of a decline in the market. Pharma is one space which is again picking up the momentum. So, but then overall the structure is quite positive. Weekly and monthly formation is strong. So I think it is initially first start of the month, maybe initially fortnightly of the March series should be good. We should be heading towards somewhere close to 20 to 23,000, 8,000. So bias is positive. On a cautious note, the level of 50-day moving average, which is very far away, 21,600. So only if those levels are broken, then I think the trend will change. So any corrections in the market, I think we should be looking for a buying opportunity.
All right. I mean, the support levels that you're putting out there, they after that Friday's, almost a vertical sort of a 350-point rally, we have left the support zone so far behind. It's hard to comprehend, in a market momentum like this. And, Bank Nifty, I mean, that has been driving this recovery in the market. In fact, if you look at the index, it has given positive returns in 4 out of the 5, past weeks. I mean, that said, it's still about 2.5% away from its record high, and that 47,400, 47,500 has been the zone from where the index did reverse its course last time around, and we saw a sharp correction, about a 1,000-point correction from there on. I mean, what's your sense of things now? I mean, is there clarity as far as Bank Nifty's trajectory is concerned?
Luis, if you look on the Friday, if you see the Friday's chart, there was a good buying, and there was a very strong like candlestick pattern. And the way the Bank Nifty has registered that candle on Friday, it is very firm that it is not looking weak. 47,500 is the intraday or maybe a 1 or 2 day kind of a resistance. I believe 47,500 will be taken out, and the gap of 17th Jan, which is at 48,000, because of the HDFC bank, there was a gap in the Bank Nifty. So that gap is likely to be filled. So I'm pretty confident that this 47,500 will be taken out, and 48,000 would be the upside target, immediate upside target for the Bank Nifty. So view is positive. Both Nifty, Bank Nifty, there is a comfort zone. There's a pretty good of a buying which we saw on Thursday closing and the Friday session. So this buying, I believe that this buying will stay, and that is why I think we should head higher.
Good morning, Brijesh. There's another sector that seemed to ride the wave. You tell me if it was the case. Tata Steel broke its 52-week high on Friday, rising from 140 to 155 just in one day. It is down to 150 levels again today. Jindal Steel, on the other hand, also rose from 788 to 832, breaking its 52-week high on Friday. Kalyani Steel also rose big, but not breaking its 52-week high. This was not the case with SAIL or JSW Steel. So was it just a little bull run, or is there something else in the steel sector that's on the horizon?
Yeah, good morning, sir. So I think today the correction in the Tata Steel or maybe JSW Steel is only because of the CLSA report. They've been downgrading the stock in the event of profit booking. But then if I look it from the technical perspective, I think there is a sector rotation in the steel metal space. So I don't believe there will be a larger correction. Maybe since the stock has rallied, so there would be some profit booking. But then if you talk specifically for the Tata Steel, the levels of 145, 140, this range is a perfect range to re-enter the long positions. So I would like to see these levels to come. 145, closer to 145, I would like to initiate a long position, because I believe 165, 170 is what maybe in the next couple of months, we should be seeing those targets in Tata Steel. So there is no weakness in the monthly and weekly time frame. So definitely, this corrections should be, and this momentum should continue, is what I believe. If we talk specifically for the JSW Steel, so JSW Steel at this 820 level. So again, there has been the stock has not moved, but we are tracking this counter. 850 is a trigger. So 850 there is a is a resistance zone, and 850 there is a heavy call writers are active. So maybe we'll take a little bit longer time frame, but then once we see a breakout above 850 in the JSW Steel, I think even JSW Steel will start to rally. The supports for the JSW Steel is close to 800 mark. Either we take a breakout trade about 850 or we closer to 800, where the risk reward ratio will be favorable. So in both the scenarios, I would like to take the buy call, breakout call, or maybe closer to the support demand zone of 800, because I think this sector is positive. So we should be having a strong positive bias for both the stocks.
Positive on the metals rotation due to the rotational effect, according to Brijesh. But Brijesh, what do you have for the investors today? Your picks.
Yeah. So basically, from one is from the metal space itself, the Hindalco. We after the results, there has been a correction, but then now these levels of 500 is acting as a support. So I believe there is a trading opportunity in Hindalco. One can take a long position at current level with a stop loss of 550. I sense 540, 545 is the upside target. So that should be kept on a watch list. Oro Pharma is something which is again positive. On Saturday, we saw a very good breakout, and I believe it was in circuit on the closing out. So today, even today, Oro, Lupin, Cipla, these are the stocks which are in the momentum. So I believe the momentum, the Oro Pharma will continue. One should take the long position at current level. Stop loss will be 1050 for the target of 1150. One more, I would like to say SAIL, Steel Authority of India. So in the last session at the level of 130, a lot of positions at 130 there was a call writing was very active, and that positions got unwinded. And after that we saw a very good rally closer to 137 level in Oro Pharma. So I think maybe few 2-3 points kind of a correction closer to 135, 134. That's remain a beautiful buying opportunity in SAIL. We should keep a stop loss of 130, and we should play for 150, 155 on the higher side. So that would be the three pick from my end.
All right, those are the short-term trading ideas from Brijesh Ail. Sir, always great insights from you. Thank you for joining us on News9. But with that, let's slip into a break. On the other side, Geojit Financial Services Gaurang Shah joins us.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।
Welcome back. You're watching First Tick here on News9, and the markets, they have in fact turned a corner. They are in the red now. Nifty, as we speak, has been facing hurdle around the 22,400 mark. Currently, it sits at 22,375, down marginally, just 0.01%. Sensex is, trading down as well. It's down marginally too, at 73,791 levels. The pain in the broader markets, as we were talking earlier in the morning, is evident. I mean, the small cap space, it was up 0.5% at the market open. Now it's down 0.5%, and we are currently at 16,000 levels. And the mid cap is down 0.1%, and it's just holding above the 49,000 mark. Volatility, now we are seeing a bit of a spike this morning, but considering that we have so many events to react to over the week, and it's a holiday shortened week at that, you would expect the volatility to pick up. But 15 is something that the market, I mean, at this point in time, we should get used to it, because 15 and 16 is where we have been at for the last 2-3 months or so. But with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojet Financial Services. Thank you for joining us here on News9, sir. And I mean, over the last few months that we have been chatting, sir, you for one have been a perennial bull. And I mean, to your credit, the the going has been great for our market. But and to my mind, I mean, I think there are two issues that has been plaguing India, India Inc. for the last couple of years. One is that rural markets are underperforming, and second is that the private capex, now that is lagging. And I want to focus on issue 2 here, because I mean, if all of us are so gung-ho on the future prospects, why is the private sector not investing in capacity? I mean, are they waiting for demand to pick up, interest rate cycle to turn, elections to be over? What's your sense of things over here, sir?
Thank you, Suyash, for having me on the show, and morning to all of you all. So firstly, to answer your question as far as rural demand is concerned, I think last year, as we had discussed earlier, monsoon was erratic, and that has a significant impact as far as the semi-urban and rural India demand is concerned. Whether it is to do with discretionary spend, or whether it is to do with FMCG spend. But our sense is that there are a lot of steps that the government has put in place to increase the income of semi-urban and rural India, especially large part of the population which is associated with agri activities. So things over there will pick up over a period of time. And this year, according what the Met Department has said, that the impact is of El Nino is going to be a little bit lower, thereby expecting the first half of the monsoon to be in line with long-term averages. Second half could be a little bit of choppy, depending upon how the El Nino impact develops in the high seas. So that will come back at some point of time. So that's the first part of your question. Second part, in respect to the private capex holding back with their investment. One primary reason is that you have a big event in the next maybe about 2.5 months in form of general election. And any corporate would want to have stability with respect to political environment. And at time when, all guns are fired up, government is taking all initiatives with respect to PLI scheme or giving encouragement for capex, rolling out tax SOPs, etc., etc. So that will happen. But I think for private capex to pick up, general elections have to be done and dusted, and the result in place as per what the anticipation is. I hope if all this goes in the right direction, private capex should possibly start coming into effect from second half of this calendar year.
All right, but are there any signs that the private sector is coming back to the table? Because the government has come out and said that they will borrow less this year. The focus is clearly on reducing the fiscal deficit. So I mean, a larger portion of credit is available for the private sector, sir.
So government will decide. See, government has spoken about it. Then this was a budget on account. You could not do much. The Honorable Finance Minister could not do much because of the code of conduct being in effect. And the Honorable Finance Minister and Honorable Prime Minister have spoken that post the election, there will be a detailed budget that will be rolled out. So I guess over there you will see some changes happening. Yes, there are a lot of funds which are available for private companies to lap up, but they will only lap up when they see meaningful growth going forward from here on. And if you look at the domestic consumption as far as industrial commodities are concerned, I think that's going to pick up thick and thin as we go forward from here on. Even if you look at the recent capacity additions that some of these sectors have taken up, that augurs well as far as the future growth and demand is concerned.
Good morning, Gaurang. While private sector may be falling short on some accounts, unique investors and individual investors with respect to the National Stock Exchange have grown threefold in the last 5 years, and the last 1 crore seemed to 9 crores investors, and the last 1 crore seems to have come from just last 5 months. The daily unique registrations that averaged 47,000 in October has jumped to 78,000 in January. Uttar Pradesh and Maharashtra are leading this surge, with almost a quarter coming from these two states, and Gujarat has fallen to the third place. What do you make of this? Just digitization and performance of the markets, or confidence in the economy as well?
So I think, Amit, first one is the realization in terms of stock market being an asset class wherein if you have invested wisely for long term, and if you have a little bit of elevated risk appetite, then this is going to be the asset class which is going to give you the best return. And even Association of Mutual Fund of India, AMFI, has said that amongst the common most 4 or 5 asset classes that a common person on the street has on his or her hand is, of course, best return is over a longer period is equity or mutual fund SIPs or lump sum investment. A good part about this number that you just mentioned is that most of the new accounts that have come in has come in below the threshold limit. That means tier 3, tier 4 and smaller cities is where large part of the population is wanting to become actively involved in the India's growth story. And my sense is that if we have a stable government post the outcome of election, then the trajectory is going to be stretched further on. And there'll be more and more individuals who would want to be associated with the India growth story and investing into either equity market directly with little bit of understanding and of course acceptance of high risk, high return kind of scenario. And along with that, mutual fund investment will also grow. This will possibly translate into lesser dependence as far as the FI sell side figures are concerned. We've already seen this in the recent past. FIs have sold lock, stock and barrel, but the domestic institution had the liquidity power to face that selling pressure from the FIs. Had it not been there, we would have been possibly down and out like other emerging markets. But my sense is that this number is going to grow steadily and that will support the domestic institutions as well.
All right, the numbers are expected to grow steadily, and so you rightly pointed out it has been the local investors, both institutional and retail, that have been driving this rally, and certainly FIIs, I mean their activity, I mean that has pretty much taken a backstreet, but moving on, it's going to be a busy week for the primary markets. 3 IPOs will hit the street. Marketing services provider RK Swamy, Kolkata-based zinc oxide manufacturer JG Chemicals, and Rajkot-based snack maker Gopal Snacks. Between the 3, anything that you like?
Well, we have not covered either of them, so it will be difficult for me to comment, Suyash, but let me give a word of caution. And I think authorities have also raised a flag, not a red flag, but raised a flag with respect to the number of IPOs that are coming into the market and the kind of funds that are generated, and more importantly, due diligence in terms of valuation. So my humble request is to all the investors is don't look at all the IPOs with the single thumb rule that upon listing you will get 20, 30, 40, 50% return or maybe more. You have to differentiate between paper to paper, business to business, rate, and of course today you have got a lot of platforms wherein you can understand what that particular company is and how good or bad that company is. So do a little bit of rational thinking and then only take the plunge in terms of whether you want to invest or don't invest. I won't comment specific on these 3 names since we don't have a coverage, but one needs to be careful about business, management and valuation.
All right, do not participate in all the IPOs that hit this street. Be cautious, look at the business, look at the management, and analyze if it's the right investment for you. And that's the word coming in from Mr. Gaurang Shah. Sir, great insights from you as always. Thank you for joining us here on News9. But before we wrap things up, let's also look at how the markets are doing, and they are back in the green. Nifty, as we speak, as of 10:10 a.m. this morning, is up 0.1%. We are back above 22,400 mark. In fact, we are just hovering around that mark. 22,400 will be a level that we need to track, because it's a crucial psychological level as well. But remember, we are just about 2.5% shy of 23,000 mark, and although March is historically a weak one, but we have a lot of global cues as well as domestic cues that are supporting the market momentum, and clearly all dips are being bought in. We have seen that time and again, because buy the dips has been the strategy to go for. We'll see big intraday dips right at the start of the market, but that all is being bought into, and that has been the case in the last 3 or 4 weeks. It seems that's the case today as well. Sensex is also back in the green. It's up 0.07% above the 73,850 mark. Both indices, by the way, are at record high levels. But the mid cap and the small cap space, I think investors are getting slightly jittery over there, after the intense and immense rally over the last 12-15 months, where mid cap and the small cap indices have delivered phenomenal returns compared to their large cap peers. I think market is trying to make sense of valuation right now, and reassess and position themselves as far as this broader market space is concerned, and we are seeing some bit of a pain set in for the broader markets. Some caution is there in the system. The broader markets, in the February series, as I pointed out earlier, delivered negative returns, and even in this March recovery, they are lagging behind the large cap Nifty. Mid cap 100 this morning, as of 10:10 a.m., is trading on a flattish note, just above the 49,100 mark. We are about 700 points shy of the record high on the mid cap index. The small cap index, it's holding above 16,000 level, and that has been a crucial support for the index, but it remains the weakest segment of the market this morning. It's seeing some bit of a profit taking. It opened in the green, but we are seeing a cut of about 0.4% as of 10:10 a.m. this morning, holding above the 16,100 mark. Volatility on Friday and in the couple of hours of trading on Saturday, the volatility had slipped below the 15 mark, but we are back above it currently. As of 10:10 a.m., India VIX is up 1.35%, and it sits at around 15.2 level. But I think the key for the markets going forward, if we are to look at 23,000 mark as a target by the end of the series, I think the key will be the banking pack. Nifty Bank, as we know, has a weightage of about 30-35% on Nifty, and I mean, it has been a relative laggard for the past 12-15 months, but despite the volatility that we have been seeing in the banking index, it's starting to pick up. It's starting to move at least in line with Nifty. In a matter of days, we have gained about, on Friday, the Nifty banking index was up about 2%, more than 2% in fact, gained about 1100 points. In fact, this morning it's also trading in the green, but we are at that very crucial juncture of about 47,400, 47,500, from where we saw a sharp sell-off last week, and the market and the Nifty bank, gave up about 800-900 points. So we'll keep a close eye on that. We are very close to that juncture, but Nifty bank, as we speak, is trading in the green. It's adding to the strength, or at least providing support to a market that has run up too sharp, too quickly in a matter of a couple of sessions. The recovery, as we have been pointing out, has been quite phenomenal for the market. So Nifty bank, keep an eye out for that. That will be the key driver for the markets going ahead. But with that, it's a wrap on this edition of First Take. Thank you for watching.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known.